We got a lot of questions this week, and a number actually related to the mining sector, which is good because we're doing a special report this week on mining services. This is a very difficult sector to play because you think about it, mining itself is a difficult sector because of the capital expenditure requirements and the high risk. Mining services is arguably even higher risk because there's short contracts. But this is the value end of the market, and unlike 4 or 5 years ago when I think there was a big number of mining services players, now that's been whittled down. So we're looking at survivors, and many of those survivors have really strong cash balances. We've made 50% on SXE or Southern Cross Electricals in the past 3 months and doubled our money in the past 12 months. It is possible to make money out of this sector. You have to be very diligent in talking to management and looking at how strong their balance sheets are. But this is definitely the value end of the sector where you can find the proverbial diamonds in the rough. A number of subscribers are asking about lithium graphite because they are very hot sectors at the moment. The demand from the battery, for the production of batteries, both now and the anticipated demand in the future, produces demand for these products. And there is limited supply, especially on the lithium side. So we're going to be looking at this sector in a few weeks' time, but I would say that this is the very, very high risk end of the sector because, as I said before, there's a lot of money that goes into mining, both in looking, scratching around and trying to find a deposit, then improving it up into a resource and a reserve, and then in the feasibility study and getting the production going. I mean, we're talking hundreds of millions of dollars, and these guys are right at the foot of at the base of the mountain. So sometimes it's sort of similar to tossing a coin, but for those with that sort of appetite, they'll be interested in reading our report. A number of subscribers are asking about mobile payments technology because it's another sector that's running hot. I mean, you've got a proliferation of smartphones. I mean, I think people look at their smartphone within 15 minutes of waking up in the morning, and something like 80 times a day. I mean, this is a sector that's running hot, but it is dominated by gorillas. When I say gorillas, we're not talking about Sigourney Weaver and Gorilla and Brian Brown. We're talking about the Telstras, the Googles of this world. So these small companies are dealing with really big companies. So there is lots of contractual risk when you're dealing with big companies in terms of how much they can extract from any contract. But you're looking at big leverage, the leverage that's involved in getting something right that goes to literally billions of people. So it's a high risk sector, but one that we've covered and that we will continue to cover. What we've been talking about today is basically speculative stocks. And when you take a profit in a speculative stock is different to one in which you buy on the investment fundamentals. Speculation is all about the internal dynamics, so how your tolerance for risk, how you feel. So you have to ask yourself really, would you be happy if you didn't take a profit and that profit that's on the table now evaporates before your eyes? So how angry or annoyed would you be? So conversely, what would you be happy with leaving on the table? So often you take profits and then you leave a bit on the table that remains invested, and that's like the icing on the cake. Conversely, with investment with more stocks that have better fundamentals or more fundamentals, you're looking at external qualities of the company. So how that company relates to actually providing ongoing income for your investment portfolio. So that's a different type of strategy to when you would take profits on a speculative stock.